Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Nicole Dines, Paul Strome, and Dan Innes, catching up on MIPIM as well. Obviously, a lot of discussion around Credit Suisse at the time, but I don't think anybody was necessarily expecting the merger with UBS to come through that quickly and, of course, create $160 billion real estate behemoth, as it's been described. So it'll be interesting to see how that develops. Dan, what have you been tracking?
For me, it's been a week where the UK retail sales have been shown to grow finally by 2.2% over the last quarter, but we're still 2.3% down on the same period from last year. But retail's been quite a big focus, and as indeed it was for many investors at MIPIM. Last week had a few retail research and survey results come through. The local data company launched its retail and leisure trends analysis report on Tuesday, and on Thursday, CACI led with their broader retail trends briefing session in central London. In other news, UK-listed logistics investor London Metric, they've simultaneously exchanged and completed on the sale of a portfolio of 3 multi-let industrial estates in the West Midlands of the UK for €52 million. That's £46 million. Andrew Jones, the chief executive of London Metric, said that those assets had generated returns significantly above their initial expectations, and that had been due to accelerated rental growth and material yield compression. But he went on to say that latest transaction, together with recent sales, puts London Metric in a strong position to take advantage of new opportunities across urban and regional warehouse markets. Elsewhere, British Land has also completed on the acquisitions of 300,000 square feet of retail parks. The head of strategy and investment at BL said that with retailers increasingly focused on the role of their stores, retail parks have emerged as a preferred format. And due to their compatibility with omni-channel retail, their affordability and appeal has proved itself for online resilient businesses. And lastly, the one thing that's been on the headlines this week, Richard, is the chief exec of TikTok, Zhu Si Chu. He's been grilled in the US Congress last week, answering questions to sort of defend the app's use and independence to survive in the US. But maybe we should be careful what we say, because maybe they're listening right now.
Yeah, absolutely. Nicole, let's pick up with you. What were you watching this week?
Well, certainly ESG was a great focus at MIPIM. It was mentioned in every panel, almost every conversation, and the news reflect that as well. In fact, going back to what Dan was mentioning about revitalizing city centres, that's something the Legal & General, one of Europe's largest asset managers, very much focusing on in the UK, collaborating with local authorities to attract people back to city centres and repurpose lots of retail assets. In a briefing, Nigel Wilson, the CEO of Legal & General, said that investing for impact makes a very good commercial sense, because it can deliver good returns to investors, as well as delivering obviously benefits to society. They also say that there's a misconception that ESG investments are riskier. Well, in fact, they believe the opposite, that because impact investing means accurately identifying assets that actually society needs, that are needed in communities, and that makes them more resilient and more long-lasting and more relevant. So if you have a long-term vision, he said, the impact investing is the way to go. And again, on a green theme, Hines and Bostad, the Scandinavian residential company, has announced it's established a combined green and sustainability linked financing framework to enable the issuance of green and sustainability linked financing instruments. The framework will help the company, they said, to achieve its climate target of reducing emissions. And they have identified 3 eligible categories for investment. One is development and acquisition of assets, renovations of existing assets, and energy efficient measures. And in another sort of green story, Nuveen has launched an Article 9 global real estate carbon reduction strategy, which is focused on reducing global carbon emissions through investing in companies that are doing the right thing. And again, it's the belief, as in LNG, that green companies can deliver superior long-term results, they said, because they have less future financial liabilities, better pricing power for assets, a larger pool of tenants, hopefully more demand for tenants, and also better access, as we've seen many times, better access to debt and equity capital. So again, that's a choice that more and more companies are making. And on the sort of more prop tech front, Drooms has launched Life Cycle, which is a new product that enables customers to accesses data room solutions and for real estate assets in 3 different versions. There's the most expensive premium version that it's got AI features, but there's also interestingly a free to use version which is targeted at small companies that are really struggling to get to put together all the documentation, the increasingly complex documentation that is needed for transactions, and due diligence.
Yeah, I mean, you picked up living there, which was a very big topic at MIPIM, and also ESG. Paul, what have you been tracking?
Picking up on living, which was, as you say, was one of the big MIPIM themes. There are a few stories this week that together illustrate the breadth of interest and scope there. Collier's researchers have been looking at the PRS sector and CEE, and in particular the way that the rural to urban migration, which is now familiar and well established in many more mature economies, is influencing the markets there. Czech Republic residential private sector leads the CEE market in terms of the amount of stock with 62,500 units, which was up 10% on 2021 figures. And in second place is Poland with 10,000 units, which kind of illustrates the difference. But that was a 217% increase in the same period. That level of growth is not confined to Poland. And according to Colliers, the living sector in CEE6 last year saw a 301% increase in supply. In Hungary, Romania saw 244% increase, and Slovakia 173%. Most of the housing stock in the region is still owned by private individuals and municipalities. Collier said that demand has been generated by the urbanization movement as people go into cities in search of employment, education, and other opportunities. The breadth of the sector in Europe has been demonstrated in other stories too. Investment manager Hampton has acquired a Norwegian student housing platform with over 52 properties on behalf of one of the company's affiliates, Bo Co-Living, whose portfolio is about 1,400 beds in 13 cities in Norway, is working to double its room count within the next 12 months, with a long-term plan to reach 10,000 rooms by 2026. Elsewhere, open-ended real estate fund Catella Wohnen Europa has acquired a 62-unit wood hybrid affordable apartment scheme in Berlin's Pankow district in the northeast of the city. Properties there are being built using an innovative zero-waste timber hybrid construction method, where an exact quantity of raw material is sourced from sustainably managed forests and then used to avoid wastage. Lastly, I was interested to see that Hines has created a new global business unit which is intended to address disruptive changes in the built environment. The new unit has been dubbed EXP by Hines, and the firm said that its purpose is to explore and address the shifts underway in real estate, experiment with innovative solutions, and to expedite ESG outcomes for a more sustainable, livable world.
Interesting. I saw as well Paris-based private equity investor Eurazeo completed a further closing to the Eurasia Infrastructure Fund, bringing total commitments to around 420 million. And you're really beginning to see that momentum, I think, both in the real estate and infrastructure side. So across real assets, looking at the transition and raising capital, dry powder to be able to put that to work over the coming months and years. Thank you, Dan. Thank you, Paul. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.